Let me just start off by throwing up the magnitude of the move that we've seen in crude, and we continue to see really, that 2 standard deviation move of a surge of over 4%. We continue in the early part of the Asian session to continue to see that really the hold of that biggest gain in crude prices in about 6 months with these ongoing concerns. And as you say, Iran is really the central factor here on where this market goes next.
Yeah, I think absolutely. Like when we've seen Palestine-Israel conflicts in the past, the price premium that we've seen baked in to oil prices has been quite temporary. And that's often because there's no real supply disruption. And in this case, there is actually, I think, a real scenario where there is disruptions that actually take place. And it is all linked to how much of this or the blowback is against Iran. Because right now, I think the US is really critical. They have explicitly said there's no direct evidence yet that they found linking Iran to planning the attacks. But we have heard, from reports that senior officials from Hezbollah and Hamas have linked Iran to the planning. So I think it is a very fluid situation. But if we do see direct evidence appear, it would force US to enforce those sanctions. And that is really where we could see Brent futures in particular start pricing higher. And we're talking more in the $90 to $100 barrel, but it is certainly the risk that if it really does go to that isolationist Iran scenario, $100 becomes a real tangible reality.
Does the scale of this latest attack really take away from the fundamentals of demand and supply that we watch? Because we actually had OPEC coming out and raising their expectations of global oil demand through to the middle of this century. And on top of that, we are also getting the monthly reports from OPEC, from the IEA, and inventory numbers from the US as well. Did they still move the needle?
Look, I think that was the backdrop before this. Let's keep in mind that late September, we saw Brent peak at that $97 a barrel. And that was probably fully pricing in probably that OPEC scenario where we would see a 3.3 million barrel deficit this quarter. So we're talking, roughly 3 to 3.5% of global supply. I think the market last week really started looking at demand concerns, and that's where we saw the massive correction. And now we've seen the price increase on the back of the tensions in Israel and Palestine. So we're not even close to those peaks that we saw. But if we do see another underscoring of the deficit, and if it is actually worse than what was predicted in the last month's report, I think we have the case for oil to move higher. So I still think fundamentals play a role, but only if it makes the situation worse than what it was.
How much spare capacity does OPEC have to bring to the table if we do in fact see an escalation and a major disruption?
So in terms of the major spare capacity, we're really talking Saudi and UAE. So between them, there's about 4 million barrels a day, about 4% of global supply. But if I had to really say where you'd have the supply valve reaction, it is actually probably going to be Russia. And I think US is very clear that that's probably going to be the outcome. Look, it's going to be very hard for Arab nations to change or boost production with Gaza being bombarded and them having to almost give some level of alliance to what's happening with the citizens of Gaza. So I think it will fall on Russia to be the supply valve. And, immediately there you have about 300,000 barrels a day. And so I think that's really where you'll have some supply relief. But I think Saudi and UAE will have their hands tied because they cannot be seen cozying up to the US and particularly Israel, given everything that's happening.
Vivek, we have talked about demand concerns given the economic slump in China. Are you seeing any demand concerns here in the U.S.? Because we're getting measures of gasoline consumption here in America that may be plunging.
Yeah, look, in terms of that data point that really triggered everything off, it was that 4-week moving average measure of gasoline demand. And in terms of that demand destruction, I think it's very early to look at just 1 week's data to make that conclusion. In terms of where the market was, look, we saw yields rise, we saw the US dollar surge, and both those factors really set the scene for any indicator that showed some demand problem it would really start building the market attention towards sell-off, and oil would fall as a result. And that's really what happened last week. I think the reaction was very much overdone. And I think part of the recovery we've seen in oil prices this week is the fact that was overdone. But really the question now is front and center supply disruptions in Iran. And I think that a stable point for Brent right now is in the low 90s. But the risk right now is for disruptions to push it to high 90s and potentially 100 plus.